Here comes the pain again. With apologies to Annie Lennox and Dave Stewart, the international economic pain that has been inflicted needlessly by Donald Trump in the form of both tariffs and a Middle Eastern war are about to become far more acute. Pain and relief have waxed and waned for 18 months as markets have tried to digest Trump's on-again, off-again threats and meanderings. As we enter August, though, it now seems as though pain will not only return, but it will also likely be more severe than many of us could have imagined. Capital markets react quickly and swiftly to news. In the spring of 2025, when Trump announced his Liberation Day tariffs, markets dropped precipitously. Mere days later, he backed off, and the markets rebounded. That's the thing about market efficiency. It reacts quickly and accurately to things that are obvious, but when the consensus is not overwhelming, the market frequently continues as it always has. Geopolitical experts like Professor Robert Pape of the University of Chicago have spent months warning anyone who would listen that the U.S. effectively lost the war against Iran in the first week and has been struggling to justify its ongoing involvement ever since. Had Trump simply claimed victory after a week, the spin of limited tactical success would have been plausible. Instead, the Americans continued to press forward after their failure to topple the regime for no obvious reason. The nuclear stockpiles remain, and there is not even a pretense of getting the Iranians to surrender them. Meanwhile, the Iranians gained control of the Strait of Hormuz, and with it, the dominant political position in the Middle East. We have a transactional American president who suffers from considerable hubris, and who thinks the tactics used in New York real estate can somehow seamlessly be grafted into geopolitical affairs. That is not even remotely true. Transactional people tend to see the world using a binary win-lose paradigm. What the world is now dealing with is a clear lose-lose paradigm. The Iranians have lost militarily, and their citizens are clearly suffering, and as a result, the Iranians have decided that the whole rest of the developed world will lose economically as collateral damage for their spat with the Americans. If the Iranians have to suffer, they will do everything in their power to make sure the rest of the world suffers too. It seems nearly certain that we will be facing a major energy crisis before the end of this month. There is substantial economic pain on the near-term horizon. The question for investors is clear. Even though capital markets were slow to recognize the fact that Iran has become the dominant political player in the Middle East, how will they adjust their portfolios now that the world order has clearly been realigned? For starters, the price of oil is likely to be extremely high for the foreseeable future. Unfortunately, oil companies and oil ETFs are rated as high-risk investments, so they're not suitable for a large portion of the population. One way around this challenge is to use broad commodity ETFs, which are frequently rated as medium risk. You'll at least get some exposure to oil and more diversification to boot. The other change that is likely to manifest is that inflation will likely be back with a vengeance. Supply chains will be disrupted, factor inputs will be more expensive, and almost everything will cost more. As a result, investors should give serious consideration to increasing their allocation to hard assets. This includes precious metals, resources, and infrastructure. Depending on your time horizon, investment real estate, like REITs, might also merit some consideration. Stock markets are likely to be volatile, and rate hikes are possible as well, so it seems entirely possible the world will be dealing with a severe bout of stagflation. Both stocks and bonds may suffer in that environment. Alternative investment products that are not correlated to the stock market or the bond market might serve you well. It will likely be a good time to think about things that are out of the box. If you haven't already done so, you might want to consider market-neutral products or long-short products and/or liquid alternatives. Specialty products that invest in non-correlated cash-flowing things like music royalties can also be of use to accredited investors. Depending on who you talk to, there's a consensus that the world has been changing rapidly. The peace dividend ended in February of 2022 when Putin invaded Ukraine. Globalization ended resoundingly in April of 2025 when Trump attacked former allies with across-the-board tariffs, the likes of which have not been seen in almost 100 years. August of 2026 will likely go down in history as the point where the geopolitical balance of power shifted, and with it the global economic order. People don't want to hear this, but we all need to accept that Iran has emerged as the dominant political player in the Middle East, and that change will have a major impact on the way the global economy evolves. You should adjust your portfolio immediately.